Hi everyone, I recently shared these SBR notes, these BDO notes with some of you from my Instagram page through Google Drive, and I promised that I do a video in regards to this and how I studied SBR standards using these notes. So first of all, I wanted to say that I swear to God it took me a week to understand what is SBR about and where should I start my study and what approach should I use, because at some stage I've started with questions but I realized I don't have the basics, then I went back and I looked for notes and then I come across with these notes. You have to understand that these notes are summarized, are not comprehensive, but by having these notes next to you when you're practicing questions, you will end up knowing more about these notes. Practicing questions, you would remember the full answer. As you know, the standards can be asked from different angles. So for me, it was so much helpful that I had everything on a piece of paper, that all the questions I could get on one standards are down on one piece of paper. And I'm going to show you in the next few minutes how I studied for the SBR, and this is just in regards to the standards. I am going to upload a different video of how I tackle the group audits and the calculation part of the exam in the next few days. Now I'm going to use my own notes, so I've scanned on my desktop and I'm going to use these for this example. So I printed these and I had this in front of me while I've used the BPP revision kit. You can either use Kaplan or past papers. All you have to know that both Kaplan and BPP are using the same questions, but their title is different. They're differently named. So for example, this question here for the IAS 16 property, plant and equipment, I've used a question that is called Kate, and in BPP revision kit is question 18, but you will also find this in the Kaplan kit, but is named differently. I don't know exactly the name, but if you go through the kit, you will find it. Like I said, I would have these in front of me and I would just go with the questions in the kit, and every time I was to come across with a standard, either it's IAS or IFRS, I would annotate on my notes what question is that, and I would go back and do those questions again where I was not confident with, and so on. So I've highlighted the notes. First of all, I printed the note, but in order to have this in your head for the exam, you have to practice, because otherwise you will not be able to put down in the exam. So for example, for IAS 16 property, plant and equipment, all you have to know from these notes is that for every standard, what is the initial recognition and what is the subsequent measurement. So always remember these, because if you don't know these steps in the exam hall, you will not be able to answer the question or answer the question properly. So always remember that you have to know the initial recognition and the subsequent measurement, because it is different. So for example, from this, you have to know that the initial recognition is to be recognized when it is probably that a future economic benefits associated with the asset will flow to the entity, and the cost of the asset can be measured reliably, and the cost would incur the purchase price plus any additional taxes, and you have this information in here. And also the initial cost will also include the dismantling and removing the item and restoring the site, and you will find questions in the revision kit about this topic in here. So highlight the topic as you go along, highlight the topic that you found a question, and also annotate in here, or like I did in here, the question number and the part of the question. They're initially measured at the cost, but then cost model or the revaluation model. I know you may say that, oh, IAS 16 is it's not a difficult standard, but you can get a question in the exam that can be so much tricky, even though you say that the standard is quite easy standard to understand. So if we move on to the subsequent measurement, the cost model or the revaluation model, you'll have to know about the depreciation, how is this calculated, the residual value, and changes in the residual value. And like I said, you have this question in here that you can practice. And this question also relate to the significant components, to the significant parts that are to be depreciated separately, and you can find this in the question. So again, the disposal, highlight the bits that you find important, give you a starting point. Maybe it will not give you everything that you need to put down in the exam, but remember that SBR is not about waffling. It's not about spending time or putting down as much as you can from your head about that topic. This is a different one. This is SBL one. You have to just waffle and waffle and put down everything you know about that topic. SBR is about facts, and you have to know the standard, you have to know the initial recognition and the subsequent recognition. You have to know the steps. So the subsequent measurement is the cost model or the revaluation model. If it asks about the revaluation model, you'll have to know that if one item is revalued, that then all the items in the same class should be revalued, and you get a lot in the exam about this. Recently, the examiner is focusing a lot on disclosures, and there is a question where it asked about a few standards in relation to the disclosure. So what I did is to highlight that this standard has disclosures, and to remember, and I actually put down on a piece of paper all the standards that have disclosures. This was my way of handling this, because otherwise it will be hard to remember which one has a disclosure requirement. This was my approach in regards to the IS 16 property, plant and equipment. If we move on to the IS 19 employee benefits, just let me bring this a little bit so you can actually see. You'll need to know the kind of the employee benefits, and these are short-term, are post-employment benefits, and termination benefits when the person leaves the job. So these are the example of employee benefits. And if we scroll down in the exam, if you're lucky enough, you'll get a theory question asking about the difference between the defined benefit plan and the defined contribution plan. So all you have to remember, and it says here in the notes, that with the contribution plan, there is no obligation from the employer side in regards to the plan. So you have to know the treatment, the accounting treatment. You have to know how to calculate. Last year there was a question for the actuarial gains or losses to be calculated, and to read the examiner report, she or he is saying that students did not know how to calculate these simple steps. And as I said before, shared my Google Drive, my notes. It is an example here on how to calculate the actuarial that was given as an exam question in I think it was March 2020. You know, the examiner is kind of giving questions in the exam that were published years ago. So for example, on the internet, we may not able to find all these questions that were given before, but by using this information that learn signal were given to us, so you can find examples that you can't find anywhere else. So for example, I was looking a lot on the internet just to find an example on pension plans, because again, these are asked quite frequently. And like I said, this question here in particular, it's very good, DGwire, because it has a good example, like I said, on the actuarial gains or losses. Also, if you are looking for a template on how to calculate the pension or the service cost or the contribution or whatever it is asking, because as you know in the exam, and you can ask for the opening balance, for the closing, for the remeasurement component, for the contribution paid, for anything. But if you have the layout in your head, it will be able to calculate this in exam quite quickly. And as far as I know, I couldn't find anywhere a more comprehensive formula or template on how to calculate these, and I could find these on the open tuition notes on page 55. You should have this printed, and you should have this next to you when you're doing questions on IAS 19. IAS 19 is also about disclosures. So remember what is to be disclosed in the financial statements, and also, like I said, have a separate list of what standard requires disclosures, and you should have this right. So if we move on, IAS 21, if we look at this standard in here, again, and the BPP, it's question 19 and 20. Some of my notes are impossible to understand because I do so much, I use so much, notes on the notes, annotation, and everything just to allow me to have everything on one page. So, as you know from IAS 21, if it asks in the exam, it always starts with the functional currency, and it will ask you to determine a functional currency, and you have to put down the primary factors and the secondary factors in order to determine that functional currency. And you have a lot of questions about this in the BPP question revision kit. Is question 20 Aspire. Also, that the recognition. So when it talks about a single and individual company, which is a component company also of the group, then the accounting treatment is the translation gain or losses should be recognized in P&L. So the initial recognition is spot rate as the transaction date, and the subsequent measurement, whether it's monetary items or non-monetary items, or translation gain or losses. This is the accounting treatment, and you will understand these by practicing, because if you don't practice, it will be hard to understand. If it talks about a group, the functional currency is different. The translation gain or losses are to be recognized in other comprehensive income and not the profit or loss. So this is what you get from this page, and again, you need to practice. If we move on to the IAS 24 related party disclosures, all you have to remember from this standard: what is a key management person, the family members, and I've done the question SunCam is question 29 part B, and again it should be in the Kaplan kit also, but under a different name, so don't panic. You can find that. You can find the question even by typing on the internet, so it is not difficult to find it. And if we move on, and here you have to know about disclosures. You have to know about the relationship between the parents and subsidiaries, what is to be disclosed, the nature of the related party relationship, information about the transaction. I've practiced question 32 called Alexandra, the IAS 28 investment in associates. What you should remember from this is significant influence and what this means. What is a joint control? What is a joint venture? What, and most important, what is equity method? Because if we don't know, this will be, you will come across with so many questions that asks for equity method. So you should know this bit in here. and what is the application, the significant influence. There are loads of questions about this. You treat an investment as an associate if there is a shareholding between 20 and 50, and it has a significant influence, meaning the representation on the board of directors, participation in the policy making process, transaction between investor and investee, interchange of managers between the two companies, the technical provision between the two companies. But this can be tricky, and I've recently uploaded two files that are from the examiner team, and they're unbelievable good when you're practicing for this for March exam, because they're still up to date. And for example, when it talks about significant influence, and let me show you. And it gives this part 2 of the revision article written by the SBR team, gives an example of a company that two companies that they each they hold 40 shareholding percentage of the voting rights of the third company called Dwar, and the remaining 20 is held by a different company. So it says that the company generates gains from buying and selling properties. One company is responsible for all management activities for which it receives payment, and additional has the final decision on appointments to the board of directors. So by reading in this question, and by knowing the IAS 28 and here the significant influence, you will straight away say that oh, it has the right to appoint directors and the board of directors. So this company here should treat this investment as a as an associate, but so they have to have voting rights, but these have to be in regards to the main objective of the company, who is selling or buying company. So in this case, this bit in here is not important, because they both have voting rights in regards to the buying and selling of the property, which is the main objective of the company. It does not matter that the second company is responsible for the management activities or administrative. This standard IAS 28 with the significant influence can be tricky. Read the question, spend time on the question, understand the question, because otherwise, you know, you'll act straight away and you'll think what the standard is saying, but you'll not read between the lines, and you are going to give a wrong answer. You'll find so many answers in these part 1 and part 2 suggested answers. So yes, have a look at this, and like I said, I've uploaded this on my Google Drive, so you can find them there. So if we move on with IAS 36, impairment of assets, a very good question to practice is format, and is the questions 50 from the BPP. What you should remember from this standard is that, as you know, if there are any impairment indicators that the value of the asset has gone down, then the management has to undertake an impairment test. And what are the factors? They can be internal or they can be external. So remember these factors in here that are for an unit, for an individual asset, or for the a cash generating unit. Also from this standard, you should remember that goodwill, that the impairment of goodwill is never reversed, and you should know this when you're calculating the goodwill from for the question A. What else you should remember, that the impairment is the occurs when the carrying amount of the asset is higher than the recoverable amount, and that the recoverable amount is the higher of the fair value less cost of disposal and value in use. Again, the fair value, what is the fair value? You should know the definition, and you'll find you'll come across with this again in IFRS 13. That is the price that would be received to sell an asset or pay to transfer a liability in an orderly transaction between market participants at the measurement date. And what is the cost of disposal? Again, the cash flow when calculating the value in use of that asset. You're calculating these by using a cash flow, but the cash flow should be based on the asset in the current form, not on what plans with the asset the management might have, and or that the management is planning on investing on that asset. So no, you have to take the asset in the current condition. Also, when using the discount rate should be a pre-tax. So again, impairment of asset, you will come across with this standard so many times. It can be asked as a short question, and you will come across with this. If we move on to with the IAS 37 provisions, what you should know from this is you should retain that what is a provision, a liability of an uncertain timing or amount, and always remember that when you put down the definition of an asset, liability, provision, income and expense, or any other financial terms, you should use the definition that are given in the new conceptual framework. Again, it gives here contingent liabilities are not recognized, and contingent assets are not recognized unless they are virtually certain. So you should know this from your knowledge. What is a provision and when should be recognized? When it has a legal or a constructive obligation as a result of a past event. It is probably that an outflow will flow to the entity and that a reliable estimate can be made. What is the measurement? How can be done? For example, you should know that the provisions are more or less always measured at the best estimate of the expenditure required to settle the present obligation at the reporting date. There was a question about onerous contracts, and was a tricky question, so you should know something about this also. Restructuring provisions, they're also very important. They're asked a lot. When a restructuring provision should be recognized, and you should know this theory in here. It's extremely important. When the company has a detailed formal plan for the restructuring, and that plan has at least identified the business or part of the business that is concerned, the location, the function, the number of the employees, the amount of money needed to undertake that restructuring, and when the plan is to be implemented. And this part here relates to this, and the company has raised a valid expectation to those affected that it will start the plan as soon as possible. If we move on, IAS 38, intangible assets, such an important standard, and it is asked a lot. What is, or I've put my own words, the definition in here. So an intangible asset is an identifiable non-monetary asset without physical substance, same as cryptocurrency. And I've also added here that is controlled by the entity, is identifiable, is separably or coming from a legal or constructive obligation, probably future economic benefits and value can be measured reliably. So you should know the definition, you should know the recognition. Sometimes it will ask you in the question that an intangible asset was acquired part of the business combination, but you should know that they should be recognized separately from the goodwill. Also, internally generated assets, expense and development are capitalized if they meet the criteria, and you should use higher rate, as you can see here. if the company has a technical feasibility, or it had the intention, or it has the ability to use or sell the asset, has the resources, probably future economic benefits and expansion. Also from this, you should remember that internally generated brands and customer lists are never recognized because they can't be measured reliably, because you cannot be objective, you will be subjective and you'll give a higher value. So that's the reason for not recognizing internally generated assets. What is the accounting treatments? For example, the subsequent accounting treatment, you will come across with so many questions asking about finite useful lives that they use, amortized cost or evaluation model, or they will ask about indefinite useful lives, and you should know about what is, you should know the definition that there is no foreseeable limit to when the future economic benefits will stop. Indefinite assets are tested for impairment, or when there are indication and they're not amortized. On the other hand, in here, if you use a finite useful life, you either use the cost model or use the reevaluation model. So this is what you should remember from this standard. The standard is used a lot and you'll get a lot of questions about this standard. IAS 40 investment property. To know from this standard is that, again, a very good question that will allow you to understand the standard is question 58 from the revision kit, and it's called Black Hat. Again, you can find this on the Kaplan if you're or on the internet. What you should know from the standard, you should always know the definition, because if you don't know the definition, you're screwed, because it is very important. So what is an investment property? Is a property that can be land or a building or part of a building or both, that is held by the company to earn rentals or to grow in value. So you should know this definition, what includes and what does not include. You should dream these, because they were always asked in the exam question. When IAS 40 was asked, you should know the recognition and you should know the measurement. The initial measurement, that is always measured at cost, and then subsequent you either use fair value model and cost model. Like I said, with every single standard, please remember this, with every single standard you will have to remember the initial recognition and the subsequent recognition, because are different. So yes, this is what you should remember from the standard. If we move on to the IFRS share-based payment can be equity settled when the company gives shares to the employees, or cash settled when it gives cash, and the accounting treatment is different. And there is also a choice of settlement. I think this was asked recently, and the students didn't know how to answer this. And if you had these notes, then you would have be able to put down the answer of this question, the choice of settlement. If the company has the choice to choose between these two, or if the person has the choice to choose between these two, the accounting is different. So why you should remember that an equity settle, it's measured at the fair value of the equity instruments granted at the grant date, and the fair value is never remeasured. So never, ever, never remeasure. Remember this, because you might get some calculation to do in the exam, and it might give you the fair value at the grant date and at the year-end date. So always remember is the fair value at the grant date and never remeasured. And this is the accounting treatment. For cash settled, the liability is measured at the grant date, but then again at every year end is remeasured. You should also take into account the number of people that are living during those years, the probability and you should divide this by the years, so you should know how to calculate this. If we move on to IFRS 5, asset held for non-current asset held for sale or discontinued operation. This is such an important standard again. So many questions asked about this standard, as you can see in here. If I allow this a little bit, as you can see, a lot of questions in here. What is the definition? What is a discontinued operation? You should know this definition by heart. What you should know from this is this bit in here, that you should classify a non-current asset if the following criteria are met. And always remember this bit in here: if the asset is available for immediate sale, because you might get in the question that the company is sending goods to that component of the company, so then straight away realize that the company is not available for immediate sale, that ongoing activities are taking place, so you should know that the criteria is not met, so you should not classify the company as held for sale. The sale must be highly probable. The management is committed to sell to a plan that is sell the asset. If you see in the question that there is no plan in place, you should not classify this, and that the asset is marketed for a sale price that is reasonable, and that the sale should be completed in 1 year. So every single requirement of this standard should be complied with, otherwise you cannot classify this as a non-current asset held for sale. The measurement, you should be very familiar with the measurement. Immediately prior to the classification, an impairment test is taken place according to the IFRS 16 probably, and the subsequent increase. You have to do an example for this bit in here, because otherwise, if you don't do an example, you will not be able to understand this information in here. Also, very important, always remember that non-current assets classified as held for sale are never ever depreciated again until they're sold. So remember that. Again, remember that they have disclosures. They need to be separately disclosed. So you put this standard on your list that they require disclosures. And there was a recent question about that during that year there were some unforeseen events, and yes, you should classify. My plan was to take them in order, but I guess a different one will come up in here. IFRS 8 operating segments. I believe that the examiner is asking a lot about this standard recently. You should know about this standard. What is an operating segment? You should know the definition by heart. And here is a segment that engages in business activities from where it may gain revenue and may incur expenses, whose operating results are regularly reviewed by the chief operating decision maker, and some information about that segment is available. Always remember this information in here. Also, you should know the threshold, 10% of revenue, of profit or loss. You should know this, and also disclosures. You should also remember there was a recent question about this, that the disclosures are not necessarily to be IFRS compliant information, but is to be based on the information that is given to the parent company. So you should also remember that should be internally generated information, not IFRS compliant. So if you get this information, you should remember this this bit in here. Now, if we move on, right, IFRS 9. When it comes to IFRS 9, so many questions are in the kit, and I know that this can be a very tricky standard, both in terms of knowledge and in terms of calculation. But if you have this clear in your head, and I believe that these video notes were so good in terms of the IFRS 9 standard, because on a few pages, as you can see in here, it gave you everything you need to know about this standard, and everything in a place, so you can go easily here and review the information. So you should know the initial measurement of the financial asset and financial liabilities at the fair value, and the directly cost, the transaction cost, and then the subsequent accounting treatment for the financial assets. So what is a financial asset that is classified at amortized cost? You should know that this asset is, remember the definition, keep this in your head because it will be asked a lot, that the both of these conditions should be met, that is held for business model and for contractual cash flow assessment, that business model is to collect the cash flow and the contractual cash flow payments, but only payments of the principal of the interest, not any other. If you see in the question that it gives any other payments that is to be received, then it's not to use an amortized method. So it says in here that financial assets are classified as either amortized cost, or fair value to profit or loss, or fair value to other comprehensive income. This is such a good layout, because you would easily remember this in your head. But remember, this is just about financial assets, financial liabilities on the next page. So amortized, fair value, and fair value. Now amortized, you use the amortized method when you have a financial asset that is held for short term, that is held for trading, then you use the fair value through the profit or loss. Why use fair value? Because it has to be updated often, so use that for the short term for assets that are held for trading. And fair value throughout the comprehensive income is used for any other equity instruments or debt instruments. There are debt instruments that are not held for trading, and by doing questions you will understand the standard easily and the definition. And always remember that the examiner says in his or her report that students often are trying to to answer IFRS 9 questions that are indeed very difficult, but they don't know the basic, they don't know what is an asset, they don't know how are they classified, how is the how they should be measured. So dream this layout in here, because you will come across this so many times, and you have to remember these like like water. So you have to know the classification of the financial assets in order to answer a question. If we move on, very important bit in here, like I said, you have everything on this page, is the impairment of the financial asset. I swear to God, this is such a difficult, and actually took me quite a few days to understand this. The types of the questions that you can get in the impairment of the financial asset, and what kind of method you should use. That there are three stages, three-stage approach, stage 1, 2, 3, when you should use this. It will be hard for me to explain now, because it is a difficult standard. It is a difficult standard, the impairment of financial asset, to understand if you don't do example. And in order to understand this, please do this example in here that I have recently showed this to use. And this is in the part 1, I think, in the part 1 revision for the September exam. And the examiner team gives so many examples about the IFRS 5, about everything in here. And it also gives, knowing that the students are struggling with the impairment of the IFRS 9, and the three-stage approach. It gives an example in here, and like I said, based to this example, you will be able to get the standard on your head, and by doing a few more that you have from the past papers, you will understand this standard. So yes, do this. Have a look at this notes that the examiner are giving, and then you will understand the standard. If we move on to the financial liabilities, on the next page, again, like I said, is very useful that everything is given on the same notes. So if you have doubts about, is that a financial asset, is an asset, is a liability, is a what, you can just easily go here and follow the steps, and then you realize that that should be, the accounting treatment should be that or other. So again, the financial liabilities, what is the classification and the measurement? And again, you use amortized cost, same as a financial asset, and you use the fair value through the profit and loss. Embedded derivatives, I think there are one or two examples in the BBP revision kit, and yes, it's a difficult topic to get in, but by doing examples you understand this. There's no point for me now to try to explain this because it will take quite a few times. So yes, that is IFRS 9. And let's move on in here. And very, very important to remember from this standard is the derecognition, because often you will get a question in the exam that it asks you, should that asset be derecognized, or should that liability be derecognized? So always remember these this layout in here. So when it talks about a financial asset in the question, remember that the asset should be derecognized when there is no right to get the cash flow from the asset, or when the entity has substantially transferred all the risk and rewards of the asset. And you'll have a lot of questions about this substantially transferred of the risk and rewards. If the company retains substantially risk and rewards, and you have a list of examples, what are the substantially risk and rewards? Again, the financial liabilities, when you should recognize them when they are cancelled or expired, and the differences should be recognized in a P&L. This is such a good layout, and it has both of them in here, financial asset and financial liabilities, and it will be so good in your exams, believe me when I'm saying this, because I've used these notes. All right, so if we move on, the next standard is IFRS 15. Now IFRS 15, again, a very important standard, and as you will see in these notes, the standard is explained in a few pages. Now I've chosen this page where it has the step 3 or 4. Remember, when you get a question about the IFRS 15, don't just jump in and say step 1, 2, 3, 4, and that's it. IFRS 15, IFRS 16 can be asked from so many different angles. There can be so many questions about these standards and different topics. You should know that how you should recognize the revenue. The revenue is recognized either over time or at a point in time. So you can see here over time or at a point in time. When you recognize over time is when you the customer simultaneously receive and consumes all the benefits the entity or creates or enhances an asset controlled by the customer. Performance does not create an asset or an alternative. I know that this is, a lot of, waffling, and you may not be able to understand the standard by reading these notes. But if you have these notes in front of you, and if you're doing questions, then it will be easily and understood, as I said. And revenue should be recognized over time also by using these two methods, the output methods, the input method. This is used a lot in the construction sector, and also if the revenue is not recognized over time, this should be recognized as a point in time. So this is the bit that you should remember from this page. Again, there are so many pages on the IFRS 15, but I just selected this one because it's remember. And the next one, what you should remember from this one is that allow me to extend this one, that the what is the application, the contract cost, the incremental cost should be obtained. And remember discussing here the general, the wastage. There was a recent question about this. Also, isn't a good examples if you read this bit in here about the license cost. Again, there was a question last year about the license, TV license, music license. So you should know the accounting treatment of this. Also the non-refundable upfront fees, warranties, a very good page that you can get, a very good knowledge that you can get from this page. So yes, always remember again, this standard requires disclosure. So put down on your list of disclosures that you have to have disclosures. So this is IFRS 16 leases. Again, don't mix up IFRS 15 with IFRS 16 leases, because this bit in here, repurchase agreement, it will might lead you to think that, oh, this is IFRS 15, but it's not. So every time we get a question about sale and leaseback transaction, remember that this is IFRS 16, not 15. So when you get a question like this, first of all, you have to understand whether or not it's a sale or if it's not a sale. And most of the times it will say in the question that the transaction is a sale, so you don't have to spend time on that. Transfer is not a sale, then the assets should continue to be used as a financial liability, is more like a loan given. And you have to always remember that there is an interest income that should be taken into account. So I've jumped to this bit in here just to show you that you should, when you get a question about sell and lease back, do not think that this is about IFRS 15, because this is about IFRS 16. So let's go back to IFRS 16 again. So such an important standard. What you should remember from this, you should remember what is a lease term, what is the scope, the initial measurement of recognition. You will get a question about a lease exemption. A lease exemption is for short term, which is less than 12 months. So always remember these, because if a lease is for less than 12 months, then you would not use the IFRS 16 leases. So remember this: what is a lease liability, what is a right of use asset. In regards to this, always remember that at the start of the date of the lease, a lease recognizes the right of use asset comprising the amount of the lease liability, lease payments made before, initial direct cost, and any estimated cost to be incurred with the end of the asset removal or whatever. Always remember that the start date, the commencement date is very important, even though it says that the company took a lease at the year end, exactly on the 31st of December, for example. And you should say, oh, that's the year end. You should probably not recognize the right of use asset. But remember that at the beginning of so even though it says 31st of December, that should be recognized, and IFRS 16 should be recognized. Again, the subsequent measure, what is a lease liability, the right of use asset, or whether you use the cost model, the reevaluation, or the investment property model. So again, an important standard. And if we move on to the next bit in here, always remember that leases, that question about lease, it can be asked from both sides of the leasee or the leaser. So don't mix up these in the exam. Read the question carefully and visualize, who are you? Are you the leaser? Are you the leasee? So because the accounting treatment is different. So always remember what is a finance lease. You should know these the definition. The finance lease is a lease that transfers substantially all the risk and rewards incidental to the lessee. And the operating lease is where the lessor keeps the asset. They have the right to, for example, to put their their brand on the asset, on the car, or wherever you're getting the question. So, and most of all, dream this bit here, the classification. If you get an indicators, because in the exam question you will need to know the accounting treatment for the operating lease and for the finance lease is different. So you'll need to know beforehand, you need to know whether or not this is an operating or in a finance or is a finance lease, because if you get this wrong, then your accounting treatment will be wrong. So always remember that as an indicators, that the lease is a finance lease, is that the lease transfers ownership of the asset to the lessee by the end of the lease term. So at the end of the lease, the lessee can buy the asset, and the lessee has a bargain purchase option, that the lease term is not for is for a major part of the economic life of the asset. So if you see that the asset has a useful life of, let's say, 10 years and the lease is for 9 years, then you should straight away say that this is a finance lease, because it's more likely that at the end of the lease it will be handed, it will be purchased by the lessee. So you should remember this finance lease, that it should not be on the list or statement of financial position, because all the risk and rewards have been transferred to the lessee, so should be recognized. But if it's an operating lease, that the lessor keeps the lease on the financial statement. So this is the accounting treatment. Again, they have disclosures, so remember about this, put down on your list of disclosures. Probably from this year, it will be asked about the one issue that we are currently experiencing, and the concession that the lessor can give to the lessee. So guys, this was my approach. I think there were 2 or more standards, but I don't want to, get you bored, because there is a lot of information to get in. By taking a step-by-step approach, by having notes next to you when doing questions, if you have the basic from the notes, even though you don't have a comprehensive answer already, if you have the basic, if you have the treatment, the accounting treatment, whether it goes to P&L or other comprehensive income, or if it's amortized cost or fair value, have this clear in your head, then no matter what question it will be asked in the exam, you will be able to put down the right answer. Again, don't panic about this exam. Take a step-by-step approach to these questions that are given in here, and you have the solution in here. Yes, the SBR is also about, the current issues, what is currently being discussed. But again, this is if you should read this information at the end of your study. This is not important at this stage. You should have the knowledge, you should have the standard, you should know the calculation. And I will upload a video in the next few days about the calculation part of the exam, which is the group accounts. And also I have layouts of the cash flow and layouts of how to calculate the group profits and so on. So what is important to retain from this exercise is that SBR is not financial reporting. Don't focus a lot on calculation. You are at a different level now. You're a professional, so yes, it's important to know the calculation, because if you don't know the calculation, you will not be able to expand. You will not be able to explain that topic. But if you just know the calculation and that's it, you don't know how to explain, you will not get any marks in SBR. So you have to develop your way of detailing when you're explaining the goodwill or when explaining everything, you have to exercise, because otherwise you'll not be able to put this down. Take a step-by-step approach. Start with the standards, and then do example for each of the standards, and then start with the group accounts calculation, and then maybe in the end you can look at the current issues, and then you can look at the ethical part of the exam. I hope this exercise was helpful.